Bitcoin isn't just digital gold, it's a financial superweapon. While cash melts away with inflation, Bitcoin's risk-free design, unstoppable entropy, and built-in scarcity are rewriting rules of money as we know it. But here's the ticker. Most investors have no clue about these hidden superpowers. If you want to stay ahead of the curve, this is the one video you can't afford to miss. So let's break it all down. So let's start off the first point, why fiat currencies and the dollar aren't really ideal as a store of value. The majority of us that are not completely well off and super rich, they already have this sorted. They don't store the majority of their wealth in US dollar or indeed any other fiat currency, right? So that they're really well ahead of the rest of us mortals who are trying to find that magical asset in which to store our wealth in the long run. So if you're not a super rich person, which is the rest of us, we still have the majority of our portfolio and savings in cash, right? The main reasons why fiat currencies and US dollar is no different, is not an ideal store of value, is because it's not scarce, right? Governments print money. It's something you can easily produce. So that in itself is not scarce. It cannot be treated as a store of value. And also it can easily be confiscated by governments or central authorities or even indeed banks. They can easily freeze your accounts. That is the reasons why fiat currencies aren't a desirable asset, as a store of value at least. For a medium exchange, yes, I would argue yes, but certainly not as a store of value, for the reason I've just mentioned. Now, there are other forms of store of value, not just Bitcoin, which is the hardest asset in human history, but we have other hard asset examples like premium real estate property. So let's say if it's a super well sought after premium real estate in central London or in downtown Manhattan somewhere, that is something that is desirable because it can't easily reproduce or make more of those type of unique real estate. So that is an example of a desirable asset. And if we are into arts and collectibles, so let's say Picasso artwork, of course, the artist is no longer with us. So in itself, that is an example of a desirable asset, right? So there are various forms of store of value. But for me personally, Bitcoin is actually the hardest, right? Because there'll only be 21 million Bitcoins in circulation. That's really the bottom line feature if you compare it with real estate properties and other forms of desirable assets. One other thing I want to mention on that is, as you know, currencies, as governments can print more money and produce an awful lot more of fiat currencies, they naturally fall into the realm of inflation. And that is one of the triggers why we have seen in history lots of fiat examples and currencies crash as a result of that abuse, if you like, because it becomes worthless. If you make so much more of a fiat currency, not only do you inflate the actual supply of that in the economy, you also devalue the rest of our cash deposits in the same fiat currency in bank accounts. It becomes worthless, right? And that is an example of currency debasement, currency devaluation, and as a result, at the end, what is the symptom? Well, it crashes, right? So we have seen many examples of this, and this is the reason why you shouldn't actually store the majority of your portfolio in cash. And what is the answer of Bitcoin? Why is it a solution? Well, you can treat Bitcoin as a bank in cyberspace, right? It's held in a decentralized blockchain, which is Bitcoin, and an asset that you can store your life savings, which cannot be corrupt, full stop, or easily taken away from you, because the private keys that are used to manage those Bitcoin holdings that you have, let's say, on your hardware cold wallet, under self-custody arrangement, no one can have access to that unless you hand over your private keys, let's say, to somebody else, right? So that is the answer for Bitcoin as the leading hard asset in human history, and which makes it ideal as an ultimate store of value technology, particularly if you want to store your wealth in the long run. So not just worrying about capital preservation, but also capital growth in the long term. Why Bitcoin is risk-free? Well, if continuing on the journey of the normal man and woman in the street, where have the majority of their savings held in cash accounts, is pretty much 0% interest. So we're not going to have any gains as a result of holding our cash in our bank accounts. So an analogy of a pedestrian roaming along 0% flat land, right? Because it's not only 0% interest, it also is 0% volatility every year. So that is an example of a person who is a believer in cash instruments living in flat land. Now, if you compare that with somebody who has actually invested some of its portfolio and wealth into Bitcoin, which pretty much roams around mid-double-digit annual rate of return growth with respect to the dollar each year. In my case, I started out investing my Bitcoin holdings in 2022, and I've achieved almost 100% gain during that 2-year period, right? So it's actually a full 100% gain. But it's fair to say it's a mid-double-digit rate of return if you compare it with the 0% flat land fiat saver, right? So it is becoming risk-free in that respect. But as with many other assets out there, whether it's equities or indeed any other commodities, you do have an element of risk holding on to your investments in other assets, right? Bitcoin is no different, but it is true to say that Bitcoin is rapidly growing itself into a risk-free asset over time. Remember, Bitcoin at the moment has $2 trillion market cap in its Bitcoin network. It's one of the most secure network in the world. There's growing levels of adoption, not just by corporates and institutions and even high net worth individuals, but also nation states have holdings in Bitcoin, and this trend is set to continue in the short, medium to long term. So the more capital is drawn into the Bitcoin ecosystem, it becomes more of a risk-free asset, which is the case, right? And we have several data out there. Of course, there's always going to be that volatility in Bitcoin, but that is not the argument to say that Bitcoin is not risk-free and other financial instruments is risk-free. No, you can't have it both ways, right? There's always a risk attached to every other type of asset. And then finally, I want to talk about the last point about existential risk, volatility, performance, right? One of the few instances where Bitcoin could have an existential risk, analogy of a rare virus, right? But you could actually argue the same with every other asset as well, yet again, right? And even when it comes to the day-to-day, even when you walk along across the street, that is in itself an existential risk. As is if you take a plane and you travel overseas, that is an existential risk. If you go to a restaurant and you order a food and a third party that you never met or know, whether it's a waiter or a chef who prepares the food, cook the food for you and then hands it to you in your table, that is another example of an existential risk. So really, just to argue that the existential risk is only akin to Bitcoin, that is certainly not true and is a fallacy. There is risk in all walks in life. And this leads to the last point about entropy. It is true that we're all faced in entropy. If you think about what's going out there in the world, there's a lot of conflict now, unfortunately, with the wars going on. There's lots of taxation levied by governments upon all of us, right? Whether it's individual citizens, corporations, viruses, COVID, all this entropy and chaos that we are subjected in our day-to-day lives. All of those are reason enough to impair assets across the board in major capital markets, not just with Bitcoin, but the same could be equities, bonds, or other types of assets. So in some ways, volatility is a good thing, because where there's volatility in a capital market anywhere in the world, attracts investment. It shouldn't be seen as something negative. It's what breeds life into the capital markets, because like I said earlier on, that's where liquidity is given. So hopefully you enjoyed today's episode. If you have, please don't forget to hit the like button and to share the video to your friends and colleagues at work. And if you haven't done so already, please subscribe to my channel, as I regularly post some interesting videos such as this to do with Bitcoin, blockchain technology, and the future of finance. So until next time.